Without a doubt, over the last month or so, home prices and mortgage rates have dominated the headlines. Whether it's the local news media or online reports, it's all been about what's going on with home prices, what's going on with mortgage rates. As a matter of fact, for potential home buyers and sellers I've been talking to, it has also been the biggest thing on their mind. Sellers want to know if they missed the boat. Is it too late to sell? I've had my eye on a home and I don't think I can get it anymore. If price has gone down too much. Home buyers likewise are saying, what do we do? Or I'm going to wait for home prices to fall, or I'm going to wait for mortgage rates to come back down. So, in your monthly market report for October, what I'm going to try and do for you today is kind of provide a little bit of an overview on everything that's going on and share what the experts are predicting going forward to help provide you with the information that you need to make the best decision for you. Hi, this is Andrew with the Andrew Smith team in Frisco, Texas. And as I said, without a doubt, home prices and mortgage rates have been dominating the headlines. Mortgage rates have gone up much more quickly than anyone expected, and they're now at levels we haven't seen in well over a decade. And it's got a lot of buyers spooked. I can understand it. At the same point in time, home prices, which were running out of control, have settled down, which is exactly what buyers wanted to see. But now that the prices have come down, mortgage rates have gone up. So, where exactly is all of this going, and what does it mean for you if planning on buying or selling a home? Well, let's start off here with what Realtor.com had to say. And they said, there is no doubt that the increasing mortgage rate will make home buying even more challenging. Buyers may still find opportunities as these changes coincide with the time of the year when buyers have historically found the best market conditions to obtain more bargaining power. So, what exactly does it mean? Or does that mean? Well, we're moving into fall, right? So as we go into fall and winter, well, we're in fall. As we go further deeper into the year, sales activity traditionally declines. And the sales activity traditionally declines, the real estate markets are fairly seasonal. While home prices are normally highest in the spring, they're actually lowest as we move later into fall and into winter. Some of the best times of the year to buy are this time of year, as the best deals are out there. Prices traditionally, even though prices may be going up, they traditionally always dip this time of year. Now, what does that mean though? If rates are that high, should you wait for prices to fall, or should you wait for mortgage rates to fall? What's important to point out with mortgage rates is, why are they where they are? Right? We know that the Fed has been raising interest rates, and the Fed raising interest rates does not directly impact your mortgage rate. Okay, it indirectly impacts your mortgage rate. Without going into detail, the most important thing to keep in mind here is that inflation is the enemy of long-term mortgage rates. So while we have high inflation, we're going to have high long-term mortgage rates. So keep an eye on the inflation numbers as they come out to get an idea on where rates are heading. But saying that, the Fed openly wanted to cool the housing market. That was in their meeting minutes from a couple of months ago. And they've absolutely succeeded in that, because we've seen it. We've seen a drop off in demand and we've seen an increase in supply. Both of those things needed to happen in order for prices, which we're going to get into in just a little bit, to come down further. But here's what Mark Fleming at First American recently said. He goes, well, mortgage rates are expected to continue to drift higher over the coming months. Much of the rapid increase in rates is likely behind us. Nationally, while month-over-month house prices may decline, annual house prices are not expected to continue to go down, given the ongoing supply and demand imbalance. So what Mark's basically saying there is, yeah, we're seeing a cooling in the housing market. But if you're expecting prices to fall substantially, it may not happen. Yet mortgage rates are continued to drift back, or mortgage rates are expected to continue to drift back up over the next few months. So, with that in mind, what are the experts saying? What do the experts think is going to happen with regards to home prices? And to be honest with you, they're split. Just like us, they don't know for sure. There's not a consensus overall. They're leaning one way, but it's definitely not a consensus. So Ivy Zelman is one of the most respected economic forecasters out there with regards to the housing market. And here's what Ivy says. Ivy says projects that US house prices will fall 4% in 2023 and then another 5% decline in 2024. So that makes it sound as though you should just sit still, right? Don't do anything. Well, Ivy is well respected, but I'd also like to point out that Ivy projected home prices would fall in 2022, and they haven't. Depending on where you are in the country, home prices year over year are still up. Here in Frisco, year over year, we're still at 20% price appreciation. And in September, our month over month price decline stopped, which I'll get to in just one second. Similarly, here's what Realtor.com had to say. Not surprisingly, deals are not getting done. With sales of new and existing homes declining for over half a year, given that demand is cooling due to the high borrowing costs, incomes are falling behind inflation, and the still limited supply pipeline, it is becoming increasingly clear that prices have to decline to restore market liquidity and balance. So again, Realtor.com and Ivy Zelman are saying prices need to come down in order to create some balance in the market. Definitely not going to argue with that. But at the same point in time, we go back to Mark Fleming from First American. Here's what he has to say. While the market's considered overvalued, may need to adjust to not so new reality of higher mortgage rates. Now remember, some home markets, Boise, Austin, parts of Florida, went up rapidly, much more quickly than other areas of the country. So some of those areas are going to see changes in their market more so than others. He said, but the housing market fundamentals still support a moderation of annualized house price appreciation rather than a sharp decline. So what Mark is saying is that he thinks prices are going to moderate, but don't necessarily be looking for huge price drops. And then, so with that in mind, where does that leave us? What do they think overall? Well, overall, the experts are still forecasting, when you look at most of them, price appreciation in 2023. When you combine all of the opinions of everybody, they're looking at anywhere between 1% and 3% is where they're expected home prices to continue to appreciate in 2023. Here in North Texas, a lot of the forecasts I've seen recently have been showing price appreciation a little bit higher than that. So with that in mind, let me just show you a couple of things here as I'm going to share my screen and show you some market stats specific to Frisco. All right, so what we're looking at here is we're looking at market trends specifically to the Frisco, Texas market. And again, all real estate is local. If you'd like to stay up to date on exactly what is happening in your market, in the description below, I have a link to a Frisco market report. Don't worry if you don't live in Frisco. From that report, there's a search bar at the top, and you can put in any city or any zip code in the entire country, and you can see the latest stats on your specific market. And you can even subscribe and have that report sent to you each and every month. But first and foremost, let's look at the supply side. This graph right here is showing us inventory in Frisco. As you can see, for all of 2022, for the first half, inventory has been climbing all the way into July. But our supply here is starting to go down, right? So our supply isn't continuing to go up, it's going down. And you say, okay, well, that's great, but what is, supply is only half the equation. You've got demand. Well, the new home communities here are packed. There's a lot of activity in the marketplace. At the same point in time, showing time that tracks all showing activity across the country, they've noted that the month-over-month decline in showing activity is starting to show signs of stabilization, meaning that the demand is starting to balance out. It's no longer falling. It's starting to find a bottom overall. And again, different for every single market. But you can see even here in July, here in Frisco, you can see the inventory we reached. We're nowhere near back where we were, and now it's falling again. So likewise, when you look at us for pricing, here's the median price. You can see how we climbed, and we hit our peak here locally in April, and prices have been coming down since April, but in September they started moving back up. So that kind of shows, as I just mentioned, you've got demand that's starting to level itself out. I just showed you that we here in our market have supply that's starting to fall. So naturally, when you look at that supply and demand, that's why prices are starting to moderate. Now, again, that is going to be different for each and every market around the country. So ultimately, what does this mean if you're thinking about buying or selling a home? Now, as you saw, the experts can't agree. They don't know exactly what's going to happen. And there are undoubtedly some economic headwinds in front of us. Right now, a lot of this assumes that the labor market stays fairly strong, which right now it has been and is. Will that continue through the first quarter of 2023? I don't know. But if you're expecting home prices to plummet to levels where they were in early 2020 or pre-pandemic, it just doesn't look like it's going to happen. It doesn't look like it's going to happen nationally, and it doesn't look like it's definitely not looking like it's going to here in North Texas. So what does that mean? Well, it means that there are interest rate programs out there. One thing the experts do agree on is that mortgage rates are going to come back down. The long-term forecast is that they're going to settle between 4.5% and 5%. So is now a good time for you to consider buying? I don't know. That's a decision that only you can make for you and your family. But if that home you were looking for over the past year and a half that you weren't able to get due to a bidding war, due to nothing being available, is now available, are prices going to edge down over the next couple of months? Maybe. Maybe they will. But if you can afford it and you can get that locked in, you know that you could refinance a couple of years down the road. And if home prices drift up, like some of the experts are predicting, or the majority of the experts are predicting, long term, you're going to be just fine. You're going to be in a great shape. Is that for everyone? No, it's definitely not for everyone. So how to time this depends upon your situation. And again, that's only a decision that you can make. One recommendation I would have is to get with a really good mortgage lender and have them lay everything out for you. Take a look at it from a long-term perspective, and that way you'll have the information you need to make the best decision for you. So from a seller's perspective, why on earth would you sell right now? And the question is, I don't know. I honestly don't know why you would sell right now. If you're locked in at a 3% mortgage rate and your house is working for you, I wouldn't. I'd sit still. I wouldn't do anything right now unless you've been wanting more space. You've been wanting to live in a different area. And now all of a sudden you can, and you're sitting on a healthy amount of equity, then it may make sense. It may make sense to pull the trigger and sell and actually move into that house you've been trying to get, with the same idea with the buyers that you're going to be able to refinance down the road as those rates come back down. Alternatively, you know, in the US right now, there's more credit card debt than there's ever been. So even though the mortgage rates are higher, it is conceivably possible for some households that they could sell their existing home, buy a new home at the higher mortgage rate, and still have their total monthly debt payments go down due to the fact that some of the equity could be used to clear all of those credit card debts. Just an idea and something to think about. So again, hopefully this is helpful. If you have any additional questions whatsoever, you can schedule a call with me. I've got a link for it directly below in the description, or feel free to shoot me an email. Email's address is on the screen now, or give me a call at 469-296-5230.